All right, now let's dive into our chart of accounts. If we want to quickly navigate to the chart of accounts, we can just search them on our dashboard. And that's going to bring us directly to a list view of all of our accounts set up in our system by default when we install our localization. Now, as I mentioned several times, depending on the localization that you have installed, you might have slightly different accounts, but most of them are relevant to all of your different localizations. What I plan to do in this video is to go one by one through the accounts that Odoo sets up for us, and we're going to talk about their implications throughout the system. Now, keep in mind, this might not make a lot of sense for you if you don't have any familiarity with Odoo currently, but throughout the course, you'll be able to reference back to this video in order to pull some details and connect some dots later on. Anything that's important, we will cover in detail when we get to this section. For example, we'll talk about our journal accounts for banks, or we're going to talk about all of the inventory related accounts. So you don't need to know exactly what they do, but I just want to build some context around the different accounts available. So the first thing to notice is that we have our account code, the account name, the type, whether or not it allows reconciliation, and we can click on this view here to view more information. So now we have our code, our account name in this form view here. We have the type of account. This is a current asset, but we have several different account types. For our balance sheet accounts, we have our assets. So we have our receivables, bank and cash, current assets, non-current assets, prepayments, fixed assets. For our liability accounts, we have payables, credit cards, current liabilities, and non-current liabilities. For our equity account, we have equity and current year earnings. And then for our profit and loss statements, or profit and loss type accounts, we have our income and expense accounts, of course, which are income, other income. And then for expenses, we have expenses, depreciation, cost of revenue, and we have this other category for off-balance sheet accounts. Now inside the settings here, we have the default taxes that we can set for a specific account that will be utilized every time an account is used. We have different tags that we can set on this journal, or rather this account. So anytime that you use this account, it will be tagged with a specific tag, which will be utilized when you're searching or sorting your journal items or entries, or even in your balance sheet or profit and loss statement or any other financial report. We can set our allowed journals here, so this account can be used in specific journals. And this is a two-way tie to the journal itself. So on the journal, you'll be able to set the allowed accounts for specific types of journals, and this just links back to that. We can deprecate this account if we're no longer using it, and we can also set whether or not we allow reconciliation for this account. If we allow reconciliation, this means that any journal entry created or journal item created will be able to be reconciled against on our reconciliation screen when we go and reconcile our bank statement lines, or if we need to reconcile two offsetting journal items. You can always reconcile to accounts manually. However, this will just allow us to populate those items on screen when we're going through the reconciliation process. Now you'll see this group here, which is grayed out, but you can create account groups so that you can sort your financial statements in a more logical way with account groups. And those are based on codes and prefixes. So we might have everything that's a current asset start with 101. So we might want to group all current assets with 101-001-101-008, let's say, for example. So we can group accounts together on our financial reports. Then at the top, we have our Smart button that links to the balance of this account and all of the journal items. So if I click on that, this will bring us to all of the account move lines for this particular account. We can use the breadcrumbs to navigate back to our chart of accounts. And a couple other things to point out here. If I wanted to export this to make adjustments, I can select all. I can go to Action and Export. In this export wizard, I can select I want to update this data, which is going to export the external ID of the line along with any of the items that I want to export. So the account name, whether or not it allows reconciliation, the code, the company, and the type. And here I can select any other options that I want to as well. Now, if I want to re-import what I exported with the changes, I just click on the import wizard here and import our records. You can also create new ones manually just by clicking on the new here, writing in the code, selecting or typing in the account name and selecting the type and whether or not it allows reconciliation. If you want to make an adjustment to an existing one, you simply click on it to make your adjustments like so. All right, so now that we understand how we can move around and use our accounts, we can go through and understand the different accounts available to us. I'll use our sorting on the left here so that we can sort through our different accounts. So if we just want to look at everything in the 100s, we can select 1 here, 200s, 300s, etc. So let's start with the 100s. So the 100s, we have our current liabilities. This is a default account that's just going to act as any liability that we need to register. It is not super important in terms of its usage across the system, but it will be set as our default current liabilities account. For accounts payable, this is crucial. We need to set up our accounts payable, our default accounts payable account for our journals. This is going to be the default one used throughout the system and set in the configurations. We have our bills to receive, which again is another current liabilities. This is going to be for any bills that we expect to receive. For example, if we want to register a bill to receive for products that we've received already but have not yet paid for. We have some salary accounts, so this salary payable is going to be utilized for any salary that we need to pay. And this is going to actually be utilized in the payroll module, which we won't be covering in this course because it's not completely built out for the United States yet. But in other localizations, you can use payroll. The same thing is true for these employee payroll taxes and employer payroll taxes. The tax received account is going to be used as a liability. This is a default account that's going to be set on our taxes, which we'll go over in this course, for any taxes that we have received. Tax payable, same concept here. And then a non-current liabilities, which is just a placeholder account in case we need to register any non-current liabilities, but it doesn't currently connect to anything in the system. Actually, we skipped the 100, so let's go back to the 100s and go through this list here. We have our current assets, which are going to act as any current asset that we want to register. It's just a default account, but doesn't necessarily tie to any parts of the system currently. We have our accounts receivable for POS. This is a type of receivable account that is directly tied to the default register in our point of sale application because we've installed it. We have our bank account here, which is just a bank and cash account, an asset account. This is tied to our default bank journal that gets created in Odoo. We have a bank suspense account. Now this is an interesting account that's most relevant to Odoo specifically. And this is you can think of it as an interim account or a placeholder account where bank statement lines get temporarily reconciled to until we complete the reconciliation process. We can have one bank suspense account per journal, or we can have one set globally. We have our outstanding receipts and payments account. And this is again is more specific to just Odoo. Our outstanding receipts are going to be used anytime that we register a payment for money coming into our system. So if we have, let's say, a customer invoice and the customer sends us a check and we tell the system we received check number 123, that's going to go into our outstanding receipts until we fully reconcile it. And the same thing is true for outstanding payments, but for vendor bills. So if we're going to pay that bill with a check or a credit card or whatever the case might be, we can register the payment inside of our vendor bills, and it's going to increase our outstanding payments until we fully reconcile. Our cash account is very similar to our bank account, but it acts as a cash. Liquidity transfer is our default transfer account when we need to have an intercompany, or rather a intra-company transaction between two bank accounts. So let's say I have Bank 1, that's a Chase Bank, and Bank 2, which is maybe a Bank of America account, and I want to transfer funds from our Chase to our Bank of America. It's going to go through our liquidity transfer account. And this is a default account that can be set inside of our configurations. Our stock valuation account is a current asset, which is going to hold the value of all of your inventory. Specifically relevant when we have automated inventory valuation. This is going to be our default stock account. Again, it can be changed, but it's the default in the system. Our stock interim received and delivered accounts are Odoo specific accounts. Again, relevant to automated inventory valuation, which we'll cover in detail in the next section of this course. Stock interim received is going to be the account that get hit when we receive goods inside of a receipt in inventory, but before we've created a bill for it. So essentially, this is a temporary account that offsets our received goods and our billed goods. The same thing is for stock interim delivered. When we send products to our customer, our stock valuation needs to decrease and our stock interim delivered is going to increase. And then when we create the invoice for our customer, our stock interim will be balanced out for the delivered. Our cost of production account is going to be set for our, again, if you're using automated inventory valuation, our cost of production account is going to be increased when we produce some goods that have some labor or overhead. So the balance in this account will be the total labor and overhead for your manufacturing process. And this is only relevant if we're doing manufacturing. We have our default account, receivable account, a products to receive account, which is not tied to anything in the system, just a placeholder. We have our taxes paid and receivable. Again, these are default accounts set on our taxes, depending on whether you're doing purchase taxes or vendor taxes and customer taxes. A default prepayment account, which is just a placeholder account, as well as our fixed assets and non-current assets. So let's scroll down to our level 300s. We have capital and dividends, equity accounts that are just temporary or holding or placeholder accounts rather. They don't necessarily tie to anything, but they're there for us to utilize. Under the 400s here, we have our product sales account, which is going to be the default product sales for all of our inventory that we sell. This can be overwritten at the configuration level for the global settings. We can do it on the product category or the product itself. We have our foreign exchange gain account. There's going to be a loss account that we also look at. And this is going to be the default account that's going to get hit for any foreign exchange gains, and we'll see one for losses as well. This is a default account set in our configurations. We have a cash difference gain account for any deviations between our cashes. So we have our cash gain and cash loss, as well as our other income. And our other income is just a default placeholder account for any other income we want to register. We have our cost of goods sold, which is a cost of revenue type account, which is going to affect where it's placed on the profit and loss statement. This is going to be the default one used. So when you first install your instance, you'll have an expense account set as the cost of goods account, but you can utilize this cost of goods sold. We have some more expense accounts here. We have our 6,000 or 600 expense account, just a generic expense account. Purchase of equipment, again, another generic expense account. Most of these are pretty generic: rent, bank fees, salary expenses. This foreign exchange loss is going to be a default account that gets utilized for foreign exchange losses. A cash difference loss account that's going to be utilized as a default account. And this cash discount gain account, which is going to be the default account used for our discounts that we might receive from our vendor for paying early or for paying a certain type of way. And in our 900s, we have R&D expenses, which is just another expense account, sales expense account, another placeholder account, and then we have our undistributed profit and loss, which is actually going to be important because this account gets automatically essentially reconciled at the end of our financial year so that we can start the new year and all of the remaining balance will be in our undistributed profit and loss statement. So any of our net income will be in our undistributed profits and losses for your current year's earning, and then you can use that to offset that account however you see fit. Maybe you need to pay dividends to some of your stakeholders, but everything, all of your net profit at the end of the fiscal year will go into this undistributed profit and loss account automatically. We'll talk more about that later on in our closing statement inside of our course. So those are all of our accounts. Again, I know that there's a lot of detail here and I went through that pretty quickly. The sole purpose of this video is to build some context so that when we use them later on, you've seen them before and you're kind of familiar with the different accounts. And the most important thing to note here is that some of these accounts are tied to settings. So if you have your GL accounts already and you want to delete all these and import them into the system, you certainly can, but it may be easier to override some of these with your existing accounts so that you don't have to go and update all of the settings to make sure that you have all of the proper accounts set. So for example, if we go into configurations here and go into settings, which we've looked at before, we can scroll down into some of our default accounts and we'll see our bank suspense account, our outstanding receipts and payments account, the liquidity transfer account. We have the default account for deferred expenses and revenues. We have our cash gain and loss accounts. Under our stock valuation, we have our default income and expense accounts. Under automatic accounting, we have our stock journal, but as well we have our input account, our output account for those stock interim received and delivered, and our production account. Now, just because these are here doesn't mean that we can't override them in other parts of the system, but if we don't have them set anywhere else, it will default to the settings that we have here. And then some of those default accounts in our journals, for example, inside of our default bank account that gets created by the system, we'll see our bank account, our suspense account, our profit account, our loss account, and then our outstanding payments and receipts account will be utilized for any incoming outgoing payments. But if we go to settings here, we can override those with specific accounts just for this journal. So once again, I know a lot of information, but hopefully it's starting to build that context, and that is the point of this entire section, just to build context so that we can get into the weeds and you can follow along.